My name is Gary Dean, and I started sentiment timing with Woody Dorsey. And what sentiment timing basically is, it takes the idea of human behavior is the key determinant of the markets, and it means that basically human beings and the markets are irrational, and there's always going to be an irrational element at work, and that's what creates market opportunities. So the previous people that presented, they did fantastic jobs. And what you'll notice is that all of their indicators and everything they did, it was based off of price. And one of the big things that we do is ours is basically a technical analysis that's based off of investor sentiment instead of price. And that is really how everything started. So how I started working, well, I actually started following Woody Dorsey when I was a financial planner back in at JB Hanauer. And I read his book, Behavioral Trading, and decided to give him a call and see if he'd be interested in moving a newsletter that's geared more towards the retail investor instead of the institutional investor. And basically we started sentiment timing in 2014 and have been going strong since then. So as I had mentioned, irrational elements of the markets, it's basically what produces your market opportunities. And what he does, he diagnoses these errors, and it's the whole point of the behavioral finance. And sentiment timing, and Woody Dorsey uses a new theory that he created, and it's called the triunity theory. And the triunity theory incorporates the mood, mind, and body as a market of a whole. So what I'm going to do is pass this on to Woody to explain the theory that he created, and then we're going to go into some sentiment. What is sentiment? Sentiment examples, timing examples, and then starting to combine everything together with sentiment and timing. And then what we do with the newsletter that we produce is we combine sentiment, timing, and technicals to come up with actionable ideas for the subscribers. So without further ado, Woody, you can take it over from here.
Okay, thank you, Gary. Yeah, so basically what I've done based on my 40 years of research and 30 years of publishing is to squeeze down the research that I have been doing into shorter term time frames to provide shorter term actionable forecasts. And basically, hey, I'm really good at predicting the stock market, and Gary can show you later examples. That's kind of a strange thing to say, but it's true. At any rate, this triunity theory, you probably didn't come to hear about a theory, that's okay. But let me just tell you that if you want to learn something new, you're going to have to forget some of the things you think you know. That's just the fact of learning. So to approach the market the way I do, you really need an enhanced worldview. At any rate, I didn't really invent triunity theory in the sense that it's basically the facts of the market. It's the way the market really works, and I'd be happy to discuss that further with anybody who doesn't want to think that way, but it's a fact. The basic fact is that every human being has 3 brains. This is cognitive science. It's a fact. You can look it up. So let me ask you, what does that mean? It means that every human being is dominated by the 3 brains, the emotional brain, the neocortex, or the rational brain, and the physical brain. So, okay, pop quiz time. How many brains does LeBron James have? He's got 3. What about Donald Trump? He's got 3 brains too. How about Kim Kardashian? That's not a trick question. She actually does have 3 brains. And the Pope does, and the Dalai Lama, and everybody you ever met, all of your relatives, everybody has 3 brains. That's the way human beings operate. Okay, so what? The fact, though, is let me ask you this next pop quiz. Who created the stock market? Was it created on the seventh day? Like out of Genesis? Is it on the seventh day God created this, 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 and the stock market? I don't think so. Maybe, let me see. Albert Einstein created the stock market. Not so sure. So who made the stock market that we're interested in? Or all markets? Human beings. Human beings. It's very simple. Markets are an absolute identical mirror of the cognitive structure of human beings. So if you want to study the market, people say they do, okay, you have to study this three-brain structure. And that is what triunity theory is, where you look at the emotions of the market and of people, the technicals, how the market acts, how people act in the market, and the fundamentals, which are what people think about the market. So it's pretty simple, and it probably wouldn't be that interesting except for the fact that, you know, I can predict markets by using it. I don't need to know what the price to earnings multiple of IBM is going to be next year. I don't need to know where the 100-day moving average is, you know, of the IWM. I don't need those things to predict the stock market. Okay, let's go on and look a little further here. Any questions? I'm happy to. Questions are good in terms of dialogue. So a lot of people, again, because we're doing sentiment and timing, is people focus on the sentiment aspect and the timing aspect. And those are two brains. There's another brain, as I mentioned. But these are two primary things. And of these two things, if you read 1,000 Years of History, you will discover, and I'm happy to lecture on it for hours, is that basically people have pretty much ignored emotions relative to other things in their cognitive structure. People aren't too into emotions. They're too fuzzy, they're whatever. That's a longer story. But at any rate, so sentiment or market emotion is a very powerful because people don't understand it and appreciate it and use it. So therefore, it's an undiscovered indicator in the market. So essentially what happens is for every trading day, there is a sentiment, a bullish sentiment number, a number that's associated with every day. Just like when you look back at a 6-month history of the S&P 500, you see a bar for every day. That bar is the measure of the price action that happened on that day. Well, for every day, there's also an emotional component, an emotional quotient, which is the daily bullish sentiment, which I have also coined as an emotum. It's a piece of data that goes with that. Now, what we do is we use these two different measures and other things, including traditional technical analysis, to come up with forecasts, because if you know what the sentiment is on any given day, that's great. That's like the latitude of a location. But if you also have very good timing, then the timing is like the longitude. Now, you can have the longitude of a location and still not know where the hell you are. So you need longitude and latitude, and that's where we put these two brains together. So we focus on this sentiment, this daily sentiment. Now, the key thing is the diagnosis of it, okay? Because some days you get a sentiment could be 42% bullish. What does that tell you? Gee, I don't know, maybe it's 73. But when you start to get either very high or very low numbers, that becomes interesting, because it is typical for a market to be topping out on high sentiment and be typical for it to be bottoming on low sentiment. That's not always true, but that is one indication. So you're seeing here some kind of extreme daily sentiment numbers and where they have occurred in some recent price history. So this is one of the things that we look at to begin to diagnose the emotional setup in the market. Then we have to overlay on that timing and as well as other technicals to come up with the forecast. Now, I've been doing this for a long time, so there are certain subtleties that I'm familiar with. So for instance, you'll see on this graph, going back, there's a 2% bullish all the way to the left, and after that there's a circle. Now that circle is on the low that was made April 3rd. The market made a low in the morning. The futures market did. Now, hello?
Welcome to the webinar.
I'm sorry, Woody, that was the other computer.
Okay. So what's very interesting is that you don't see a sentiment there, but in effect, because I was watching the market, Gary and I both were, the market plunged early that morning but closed up on the day. That was a very important actual price low, and one of the things that I had identified that was the end of the correction from March. And in effect, the stock market has been in a rally from that point forward, which is a different interpretation than some people who felt that the market was in some kind of a triangle or rising wedge. The market actually bottomed there. So these sentiments always have to be interpreted. Let's look at another example of a principle of it.
Well, this is actually this is the intermediate term sentiment chart. So we have this is the short term. What we do with the newsletter that we put out is Woody puts out the short term investor sentiment, and then below that we also have the intermediate term. So that's the next chart that we have, Woody.
Okay, so as Gary said, I mean, I keep a lot of different moving averages of sentiment, et cetera, but this gives a little bit broader picture. And again, we're focused on how you can make money every week or two or three. So we like to focus on shorter term sentiment rather than people who might say, gee, you know, the last 4 months sentiment has been high. Well, what does that tell you? It doesn't tell you how to make money. At any rate, you can see here that this broader sentiment also generically follows the market. So we look at it as well as an additional filter. And let's look at the next one. Okay, this is showing some history of when we looked at a timing pattern, which is, again, is different than sentiment but related, where I had projected a black hole, which is a very negative price pattern. Black holes occur at lows. It's a negative price magnet. One was due October 13th of last year. And
now, also in the one thing that I wanted to just bring up was that the August 19th newsletter that was put out, it was projected that there was an interim correction was due into the 920. So the black hole, what it was basically telling was the black hole was due to bottom on 1013, and there was anywhere from the 920. So this was Woody's actual, let's say, timing technicals that were giving him these dates well in advance, and that's one of the things that maybe that in a little bit you want to touch on are the timing technicals aspects of it. So this was our 819 newsletter that was giving the 920 date as well as the 1013 on that.
Yes. So getting into the timing aspect, this is what we're talking about here. There are many different timing modalities which I have studied. From shorter term ones, so for instance, we talked about market weakness due this past Monday and the Friday before. Yeah, that turned out, and we would rally this week. Yeah, that turned out. But I also predicted lows around May 25th and April 17th that operated over a shorter term time frame. Now, there are longer term time frames as well. And there also are these, a black hole, which is when you get really big moves in a short period of time. Now, I could tell you right now when the next black hole is, but you know what? It would be useless for you. Because if I had told people back in July of last year when the black hole was October 13th, everybody would be putting on all kinds of put spreads and this, that, and the other thing. And in reality, you didn't really want to get short until much closer to the black hole. But these black holes exist, and there are also golden halos. A golden halo is a very obvious time frame for a high of some degree. So I look at all of these timing indications. So for instance, I also talked about here recently that the market could be bottoming here and could rally into month end and quarter end in early July. Why? Because there is a pattern there for some kind of a high, just like there was in, let's say, August of 1987. So if you know where these time periods are into the future, and I do, because I've been studying it for 40 years, it's extremely useful to put together with the sentiment and also with regular technicals to filter what and when to trade. So there are many timing technologies to forecast these turns. Gary, let's look at the next one here, please.
All righty.
So maybe you'll speak to this more here.
Yeah,
But
I can go a little bit into. So, and what we'll do is we'll go back and touch on some of the go a little bit deeper into the sentiment aspects and the timing technical indicators that you use, and we'll combine them all together. But what he was talking about is the data that Woody has. It's unlike anything that's out there, basically, because it's his information, it's proprietary information. So one of the things that I do with the newsletters, I do just your regular technical analysis. So like the previous presenters, it's based off of price, it's based off of patterns, pivot, and your regular support and resistance. And what I find often is that when Woody is looking for potential weakness, like let's say, for example, last all of last week we were looking for last Friday to be weak into Monday, and what happens is you find that price is actually right at certain resistance levels, and also sentiment is then supporting a move, and all you have to do is position your portfolio for a quick short trade. Now, the thing that was very interesting that I thought was really interesting with it was that it was the information that was provided in the newsletter was just for a 2-day quick move, and it was exactly what took place. It happened in 2 days. So what I want to touch on real quick is this was the black hole that what he was talking about, where we had mentioned it in the 819 newsletter. So this was the black hole, and when I talk about combining technicals with specific turn dates and sentiment, here is what we call a bearish divergence, and what that basically is when you have price making higher highs, but yet you have your technicals that are making higher lows. So it's considered a bearish divergence. Now, the turn date that was expected was 9/20, and remember that was given all the way back here. So once we got up to this level, you can see this trend line, and that's exactly where the top was. It hit exactly on September 20th, and from there we saw the S&P drop over 200 points. It was one of the largest corrections that the S&P had seen in years. So the part that was interesting on this was as we were crashing here, a mini crash, let's say, everybody was turning bearish, but yet we knew that this black hole, the low was coming on the 13th, and from that, as everybody was jumping out of this market, we saw the S&P rally over 280 points. So the two timing aspects of this were spot on, and it actually called on each one of these. And when you have just for example, this one right here was a top. I don't have the actual chart up that has all the different turn dates on it, but this was a top, and here's another example of a bearish divergence where you had price making a higher high. And if you look here, here's the price, here's our technical indicator that was making a higher low, a very big higher low. And from there, we saw the S&P drop 100 points. So the term dates combined with the divergences gives you a really good, let's say, high odds trade setup. And we don't give actual trade alerts or anything like that. We're more an informational aspect of things, but the technical spots actually give you areas where you can look to take an actionable trade. So this is just the example of, let's say, the black hole. So let's go to the next one here. And again, this was previous support right here. This was the black hole event. And if you notice, it landed right at support. So the day, all of this was called here, where the top was going to be, where the low was going to be, not price, but time. And if you notice, this is exactly where price went to before it rallied over 280 points. So the timing predicted where the actual price was going, even though we had no idea, because the price could have stopped here, but we knew that was not the date that it was scheduled for the black hole event. And from there, it actually came and made the low here, and again rallied over 280 points. So that's an example of how you combine the technical aspects as well as the timing, and knowing when to expect a turn. To me, it's more important than almost where, because there's so many different areas that you can. Ways that you can try to predict where price is going to turn, but if it's not on a set time or an energy date that's supposed to be reversing the market, Elliott waves, the wave counts get demolished. From there, you have these bearish or bullish divergences that will carry on for weeks. So you can predict, you can try and figure out where price will turn through your regular technical analysis, but the thing is, you're guessing unless you know exactly when to expect the turn to hit. And when you're able to combine them both together, it really does just enlighten your trading portfolio, because you're very, very relaxed with everything that goes on, because you have time and price on your side, and it's more just a waiting game. So let's go through. I'm sorry.
I just want to say that let's look at this another minute here. Just brought up some very good points, but I want to explain. There's the technicals, there's the timing, but remember there's a sentiment which we're not showing here. So there's a triple overlay. The other thing is when you have, I've studied this for 40 years, and I can just tell you, whenever there's a black hole, I could never be short there. You'd never be short at a black hole. So, it's not like, oh, well, what if we keep going down for 3 weeks? No, you'd never be short at a black hole. And I can tell you that. Now, you take this down to a shorter time scale. One of the things that Gary and I looked at earlier this week is we had some timing for last Friday and this Monday.
I actually have those.
We had some low sentiment, and we also hit the key support around 2070-ish in the S&P. And because I had this idea of it coming back into the end of the month, that was like a no-brainer. Like I said, you can't be short. I said that, coming in Monday, you can't be short as a tactical trader. So these things can give you an extra confidence that is no one else does it. I've invented these things. This is a lens that if you're in the market, you really need to have. It doesn't mean it's going to be right all the time, or you can't use your other indicators, but it's very, very important.
Hey, Woody, what I'm going to do is actually go through all last week, what took place. So this was from our newsletter, and this was, I think we put this out on Tuesday. And what he was saying was that the market energy for the week suggests that we're going to get weakness on 612 into 615. So this was last Tuesday. So what we did from there is we started, at least my job of it was, we already knew when the time period was. So if we go back, this was where we got the the 91% sentiment level there. And all I did was just figure out where price had a very good chance of reversing. So we had an open gap that was here. You had resistance, and all we did was we just gave specific resistance levels to look for as we ran into these dates. So it just so happened that this ran into this on the Thursday. I took a short position at the end of the day Thursday, and sure enough, it was the 2 days we had a 44 point drop in the S&P. And if I go back, this is where actually I'm sorry, this isn't the latest sentiment chart, but we had an 8% sentiment reading that came in on Tuesday. But again, knowing the time period on it, because you could have taken a short here, we had some small bearish divergences, and probably would have covered your short because it looked like it was breaking out. But if you knew exactly when to expect the turn, which was the end of day Thursday, because Friday into Monday was supposed to be weak, you would take this and not really be concerned at all with this little breakout here, because you knew the end result was coming here. And it just so happened that on Tuesday was when it expected things to get back to normal as far as the uptrend. It found support. We had a low sentiment reading on it, and as you know, we're up to the 21-22, I think, today, which is another resistance area, but that has nothing to do with anything. But this is just how you use both time and technicals to be able to, to see where things are going to go. So that's all I'm going to do.
So I want to say that, the point is, what Gary is saying is, we're not surprised what the market has done here. We're not surprised by this upside. Now we have some ideas about when this upside may end and when you can look for the next downside. We already have that in play. So now we have to watch the technicals, but we already have very good timing indicators of what to look for.
Right. I just want to show something real quick on this, and it will show you the actual one of the times that we had with the different calls that has all the different dates on it, so you can get an idea of how these actually play out. Here it is. I'm sorry. So this is actually these are turns. These are dates that Woody had said way before. It could have been a week before, 2 weeks before. But if you notice, each one of them actually was taking place almost on the day that they happened. And when you're able to combine these with with sentiment as well as technical analysis, you have to do a little bit of work on your own, because, like I said, we're not giving you trade alerts and telling you to do to take this trade or take that. We're giving you ideas, but the information that you're gathering from Woody, who's basically, in my eyes, one of the best in the business in the world, it makes you're trading a lot easier. And one of the biggest things that you really have to control as a trader is your emotions, because when you make an emotional trade, you're going to lose 99% of the time. That little guy in your head that's telling you that the market's not going to bottom. We're crashing. And the minute you sell is when we pop back up, and it's happened to everybody 1,000 times. And with Woody's sentiment information and data and his the way that he's able to maneuver through the market turns, it just makes it, at least on my eyes, just as a real trader, it takes the emotional aspect out of it. And things aren't always going to be correct, but notice that when they're not correct, they're very limited. They're picked up on very, very quickly. So I'm sorry, I just wanted to give a quick snapshot of the of some of the previous calls in the past.
Okay, now, are there any questions that have developed, or maybe you have a question now about anything that we've talked about? I don't have the questions in front of me. Maybe
I don't see questions either. Reed, is there anything out there?
You guys can't see the questions?
No, I don't see anything.
If you go to the dashboard and you hit plus on the question, do you see that little line item?
About
On the top?
Yeah, it should have a little plus sign next to it.
mm,
If you're looking
I'm
like where it has all of the audio controls and visual controls and stuff like that.
okay. Is this? I don't know if you're looking at this on my screen.
No, I can't see it on your screen. If you pull up the GoToMeeting dashboard, if you just click on the little flower icon, right, like down at the
Um,
bottom, next to your PowerPoint icon.
okay. Okay. Chat. Is that where the plus is? The chat.
You want to hit chat to be able to respond if you want to type in anything back, but then you're also going to see something that says questions too, and that's going to be everything that the audience is asking you.
Okay. So the questions. Just click on that.
Click on the button right there, and you'll be able to see them all.
Okay, I don't see it. Anyway, let me know what the questions are.
Gary, do
Okay.
you see 'em?
So I'm looking at different. I'm not sure what I'm supposed to be.
Do you see any of the questions?
Kind of. They're looks like they're squunched into this little box
Yeah,
here.
no, okay, so hold on to that line item and pull it out outside that little dashboard, and you'll be able to expand it, and you can see all of it. So if you pull it outside of that little dashboard I'm telling you about, and pull it onto the
Okay.
screen,
Alrighty. So I pulled it out.
okay, and then pull it down at the corner, and you'll be able to pull out all the questions. It'll expand for you, and you'll be able to see all the questions.
Okay. I don't know why I'm having a hard time with this. Sorry about this, folks. I haven't really worked on this too much.
Reed, if you see the questions, can you tell us what they are, and I can answer them?
Yeah, I can do that. It's not gonna.
Okay.
Let me see if I can do that for you. How often do you send the newsletter, and do you have institutional subscribers?
Well, we send the newsletter at least twice a week, and sometimes updates an additional once or twice a week, depending on what's happening with the market. And we do have some institutional clients as well. It's really for people who are very interested and active in the market.
I have somebody else asking for you to please tell them the next black hole. This is earlier in your presentation.
Yeah, well, it's like I said, it would be a disservice. It would be a disservice to do that. Just like last year, I knew when it was going to be, but then people start to focus on that. They get into short positions or whatever. It's not due for the next couple of months, so there's no point in putting on that trade. If you subscribe to the newsletter, it will be made available to you in a cogent way that you can make use of it.
Those are the only questions that I'm seeing right now. It looks like we
Okay.
have another about 7 or 8 minutes, 6, 7 minutes left.
Okay. Well, what really, I mean, the main thing that really we wanted to go over, I think. Hang on, now I got to move this over. Okay. So really, the primary things that we, if there's no real questions on it, was the part of the newsletter that nobody really knows about or knows how to do is track sentiment, investor sentiment, and also understand how to interpretate that into actionable advice. Meaning, if you have a high bullish sentiment reading off of a low, it doesn't mean that the market is going to reverse from there. And Woody is, like I said, probably the best sentiment interpreter there is in the world. And what you have to do is understand when these sentiment readings come into play and when to start looking for some type of reversal. And that's where Woody's timing tools come in and really are able to project the future turns like we have in the coming weeks that are approaching, when to expect some kind of top. And then from there, is it going to be an important top? As Woody said, it might be. We have to just see how the price action goes. But Woody, is there anything else that you wanted to add?
Well, yeah, I mean, you bring up a key point, which is just like everything in the market, it has to be interpreted, and to do that, you have to have experience. And sentiment and timing do go together. I mean, it's like these, professional golfers learning how to read a green. And there's a lot of different situations. Is it in the morning and the course is wet? Is it the grain against you? How short did they cut the grass? There are many, many factors to look at in terms of learning how to read the greens. The same thing with the market. Learning how to read the market, you have to have experience and you have to focus on it. So again, high sentiment can be bullish or it can be bearish depending on the price bar. Was it a huge reversal bar that happened? Where are we in the larger profile? Let's say the black hole was due 2 weeks from now. Then any kind of uptick in the market where you got like any kind of high sentiment, 75, 85, 90%, would probably just be a very simple short covering wave two to sell into aggressively because you have the black hole coming, 2-3 weeks out. That's very different than here where you don't have a black hole due, and I've said that for the last couple of months. Don't look for the big move now. In fact, where we are right now is the potential for what I call a golden halo that's coming maybe in the next couple of weeks, where ideally now that Greece has been discounted somewhat, and you have the Fed out of the way and they're dovish and all those sorts of things, and the market bottomed at key support and it's trying to rally. If there was some kind of resolution on some of those issues, and the stock market has some kind of a spike up in reversal, then you would be in a position where, with very high sentiment there, might indicate a great shorting opportunity. So again, it depends on the on the context. So, but that's what I do. That's all I do. Don't ask me to do the pole vault or tell you what the price to earnings multiple is, but I can interpret price, timing, and sentiment. That's what I do. Now, by the way, everybody would like to do that. Well, my advice to you would be probably for the amount of time and effort and sweat I put into learning this over 40 years, you're probably better off learning how to play golf or learning how to play the violin. But that's what I do. That's what I do.
That's a good analogy of it. So, but what we're going to be doing, Reed, and this is really just for your audience. We don't really give any free weeks out, just because the information that Woody provides in the newsletter, it's forward-looking. So there's a lot of dates that people can subscribe to and pick up on what dates are supposed to turn, and then they cancel. But what we decided to do with your audience is we're actually giving 2 weeks away, so you guys can get an idea of what Woody does and how magical really these term dates are, and really see the type of information that you probably have never ever seen before in your lifetime as a trader, because unless you were an institution up until recently, you weren't able to see Woody's information. So it's we decided that what we're going to do is we're going to give the readers a free 2 weeks on it. And if you can guide me on how I would post that, I have the link. I'm just not too sure how to put it into your board here. I'm not sure if I don't hear anything. Okay, let me do this. I'm just going to put the link in. Hang on. Hopefully that works there, so you guys can see it. But that's really pretty much what we have. Is that showing up for everybody?
Yeah, I'll pop that in the chat as well, so they can actually just.
I see it, and I hear what you're saying.
Okay, you do also is they'll get an idea that there's a video in there also that goes over some of the previous trades and get an idea of how things work. But like I said, I've been working with Woody for a little over a year now with the sentiment timing, and I've published another newsletter, and everything just changed when I really started learning the way that he looks at the markets. And like I said, it's some invaluable information, and I know it's not stuff that we can show you like the previous presenters because this is Woody's proprietary algorithms or data system that he uses to get this information.
All right, well, thank you, everybody.
Reed, is there any other questions? I'm not really too sure on this.
We got like 1 minute left, so I can see if there's one or two more. Do you use any other TA indicators?
I'm the one who really does the technical analysis stuff. So I really don't. I primarily take Woody's call on when to anticipate the turn, and from that I'll just use I personally use like the price oscillator or the MACD or something like that just to see if there's divergences. But mainly what I'm focusing on is where support and resistance is as we approach that potential turn date.
All right, let's get one last one in here. Is your indicator at BTM of at the bottom of the chart, MACD?
Oh, that was actually a price oscillator.